Happy New Year everybody and welcome back to AZ Trading. This will be the first video of 2023, so I'll be sure to make this a very special video where I'll showcase my criteria list for a very high probability A+ setup. So stick around because this video will cover a lot of interesting and very important topics. So sit back, relax, get your note-taking ready because I'm predicting this will be a slightly longer video. And we're actually a couple days overdue for me to showcase the trade that I took. But anyways, the trade in question was taken on the 28th of December on the Wednesday. And on Wednesday, we took a short position on the Dow, riding it all the way to the end of the day, capturing almost 500 points. But don't be too surprised, I didn't just have one position on and took off everything at the end, capturing a 1 to 7 risk to reward. The majority of my position was taken off much earlier, about over here, near a 1 to 3, 1 to 4, where I left a small partial of my position to run to the end of the day, and that's how we caught the rest of the move. So even though there was just a little bit of a position running to the end of the day, capturing this extra couple hundred of points essentially took very little effort. And you guys already know, we're not backtesters or hindsight reviewers over here. Actually, backtesting is a very useful skill, but we're not backtesting this trade. So I'll turn on my executions and the labels, where you can see my initial entry, where I've taken a few partials along the way and letting 5% run to the end of the day. And before I go straight into listing a criteria list for my A+ setup, I thought it'd be a good idea to just go through my thoughts before I took this trade so you can get an idea of what I'm looking at before a trade. So as the day began, we can see that price had painted a range. So we weren't trending bullish, we weren't trending bearish. We were just creating liquidity above and below a range. So you can see we have some relative equal highs above here, as well as some relative equal lows down here. And you know the pattern we use to trade is the RMR pattern, so I'll just zoom into a lower time frame so you can see how we captured this entry. So we're in the 1 minute chart now, and if we look for the RMR pattern, as price breaks down below this equal low area, this could be the raid. And next we look for a market structure shift, so breaking a swing high of sorts. This would be the market structure shift. And finally, the last part of the RMR, the return area. So we have a gap over here, and as price retraces into that gap, that's where we can place our long with our stop loss near the raid's low and objectives above. And this right here is a bullish RMR pattern. But hang on, why didn't I take a bullish RMR trade and instead I had a bearish one? Well, if we look at this piece of price action in a different perspective, as price breaks these equal highs, we can call this the raid. And next, the market structure shift bearish, breaking a swing low. This would be that shift. And finally, the return into a gap that's been presented once more as price retraced into that return area. That's where I placed my short, with my stop loss at the top of the raid over here and objectives below once again. And this is the exact bearish RMR trade that I took. But the question is, why did I decide to take this bearish RMR trade and ignore this bullish RMR setup? And that brings us on to our first criteria for the A+ setup, and that's focused on the objective. So before you place any trade or look for your own setup, whether it's an RMR or not, the first thing I have in mind is my objective, or what I'm aiming at. Because obviously, if there were plenty of equal highs above, let's say there were heaps and heaps of equal highs over here, and perhaps there were even higher time frame equal highs there as well, we know that above this area would be very, very key, and it'd have a lot of liquidity. And that's basically what the market aims for. It aims for areas of liquidity. And if this is what price looked like prior to the entry, obviously I wouldn't want to look for a bearish trade, and I'd want to look for a bullish trade, because my objective above has so much more liquidity based on those equal highs, and my objectives below are just some regular single swing lows. And because your objective decides whether you're bullish or bearish, if you don't lean towards the more likely objective, then it doesn't matter what criteria or how clean your setup is, your setup will be less likely to play out if you're not following the more likely objective. So for this trade, what made my objective an A+ objective? And for this trade, overall, it was not an A+ setup. However, it did have an A+ objective, just not A+ other criteria. So what was the A+ objective that I saw in this bearish trade? Like I said, we've got some relative equal lows, not too interesting since they were already taken. We've got some regular swing lows, and if I zoom out a bit, we've also got this swing low down here. But overall, nothing too interesting over here. What would make this interesting is if there were multiple equal lows. However, if we go on to the Nasdaq, which is a closely correlated market on the Dow, Here on the Nasdaq, you can see we also had those relative equal lows and equal highs, but if we're so zoomed in over here, we'd have no idea what's going on the left. So if I zoom out and look at this chart in a higher time frame perspective, here on the 15-minute chart, you can see that this swing low over here, if I extend that to the right, you can see that price just barely wicked underneath that level, which basically created a relative equal low, since I'd argue that more liquidity was generated here rather than taken. What I mean by that is the liquidity underneath that swing low during this bearish price leg. I'd say that this bearish leg was not deep enough to take the liquidity. And to just back up this claim as well, if I zoom out to an even higher time frame, a 4-hour chart, those equal lows that we drew over here, if I extend that one all the way to the left once more, what do you know is over here? This is a higher time frame area of liquidity. So not only were there lower time frame relative equal lows, but on the higher time frame, there was also an equal low as well. And we know that the higher the time frame, the more liquidity is present underneath, which means that in order to capture this liquidity to take the money underneath those equal lows, price will need to reach much deeper to capture that pool of liquidity. So this little wick here, if you thought it would have taken all the liquidity at this swing low made a few days ago, on the higher time frame chart, I'm sure you'll understand that there's no way price would have taken all the liquidity at this higher time frame level. And instead of taking the liquidity was generated, making it a more likely objective. So for the first part of the A+ setup, you'll need to have a very clean objective, and the higher the time frame you go, the better it is. And those objectives get bonus points if they are generated quite recently. So because we had those higher time frame equal lows, my eye was only focusing on bearish RMRs, so we'd filter out any bullish opportunities that we'd get. So we saw the generation of objectives on the Nasdaq, but if we go back to the Dow on the 1-minute chart, can you see another area of liquidity being generated? And yes, we have a swing low here, swing low here, swing low here. The liquidity under each of these areas were left untouched, so we have made some relative equal lows once more. So even before our entry, we were presented a relative equal low, which was another short-term generation of liquidity, which just makes our short-term objectives even more likely to be reached. And there's one more very important aspect of an objective that makes it A+, and that's if it's presented on multiple correlating markets. And that's what I mean by mutual objectives. That means on correlating markets, there are also very similar objectives. So for example, Nasdaq and DXY are inverse markets. So if we have those higher time frame equal lows on the Nasdaq, on the DXY, we need to see some relative equal highs. And obviously this won't happen all the time, but we'll have a look at DXY on the 28th of December. And what do you know? On the 28th of December, as the day started, we had multiple sets of equal highs. We've got a high here, another high there, high here, another high there. We've got an equal high over here, another set of relative equal highs here. So because DXY actually has two sets of relative equal highs and Nasdaq has an equal low objective, these are mutual objectives. And that is a criteria which made this equal low an A+ objective. And you can make your own criteria for an A+ setup. You could say that you only need one mutual objective, or you need two mutual objectives, or whatever. But long story short, the more mutual objectives you have, the higher the probability your objective is. And for this trade, there were heaps of mutual objectives. I'll just go on to another market, which is EU, and EU and Nasdaq move in tandem. So if we have bearish objectives on Nasdaq, we want to see bearish objectives on EU. And over here, you can see that we had some equal highs that were taken earlier in the day, but underneath we had some relative equal lows over here again. So with EU having a bearish objective, DXY having that bullish objective, Nasdaq having those bearish objectives, this is what makes an A+ objective. Alright, I think I've said the word objective too much now. So we're going to take a little break in this video, and I'm just going to talk a bit about my Discord server. On the server called the Reading Room, it's a voice channel, and my idea was I usually don't do much reading at all. If I'm doing any reading, it's probably me reading the charts. But I've always read quotes about this book called Trading in the Zone by Mark Douglas, and I've heard a lot of great things about it, and I thought, why not just read it? And I'm pretty weird because when I read, I like to read out loud, so I thought I'm just going to create a voice chat room, so whenever I decide to read, probably during the London session before the New York Open, but I'll just pop into that reading room and I'll share my screen on the book, so feel free to drop by, say hello, and I'll just be casually reading the book. I don't know if this is a good idea, but it is what it is. Alright, back to the criteria for an A+ setup, and the second criteria I have is an A+ RMR. This video is actually going to take way too long if I explain this fully, so I'm going to do it quite briefly, and I'll most likely touch back onto an A+ setup criteria in future videos. But long story short, we know RMR is a raid, a market shift, and a return area, but each of these three elements are very individual, and there's a couple criteria for each of these aspects that makes a raid an A+ raid, makes a market shift an A+ market, makes a market shift an A+ market shift, etc, etc. So first, with a raid, in order to have an A+ raid, so I'll just go through these quite briefly, but for an A+ raid, price not only needs to break short-term equal highs or equal lows, but it also needs to reach a key area for a reversal. Whether that means it's reaching an order block or reaching a gap, it just needs to reach a certain area as well. And for this setup, you can see price reached a lower time frame bearish order block. However, it is a lower time frame order block and not a higher time frame one. And we know the higher the time frame you go, the better it is because of the more key that area is. So for this raid, it raided some relative equal highs and reached a key area for a reversal, the bearish order block. But not only that, in order to have an A+ raid, it needs to break sentiment whilst leaving the objectives still at play. What I mean by that is over here during this bullish raid, if we have a look at what the sentiment was for the New York session, we had some ranging price action and then we had some bearishness. So we had a very short-term bearish sentiment for the New York session. So this will entice more and more shorters. So if we have a raid that breaks sentiment, so a bullish raid, this would be a much better raid than a bearish raid, because a bearish raid would be with the sentiment and a bullish one would be breaking the sentiment. But once more, this is a lower time frame sentiment, and the higher the time frame you go, for example, if we had a bearish Asian, bearish London, and a bearish New York Open, sentiment would be so obviously bearish, and afterwards if we had a bullish raid that broke sentiment, as well as reaching a key area of a reversal, as well as raiding some relative equal highs, this would be an A+ raid. So there's a lot of context that goes into what an A+ setup is. But I just want to preface this by saying this is exactly what an A+ setup is. Depending on what your criteria is, this is literally the highest probability trade you'll find if it forms. But the whole point of an A+ setup is it does not form very often at all. It might form parts of an A+ setup, but very rarely it'll form every single part of an A+ setup. So it's very, very rare, but when it does happen, it's definitely not a bad idea to take advantage of it. That doesn't mean risk 50% of your capital. It just means it's a higher probability trade and you can do whatever you wish with that knowledge. So that covers an A+ raid, and I just want to say the more mutual everything is, the better the setup is. So if you have an A+ raid on the Nasdaq, if an A+ raid is also forming on a correlating market, that is an even better sign. So far, this trade is going very well. So we've got an A+ objective, we've got an A+ raid. Next, with the market structure shift, we mentioned that we have some short-term lows over here as price broke through. This is the market structure shift, but this is definitely not an A+ market structure shift. We broke a short-term swing low, so we have shifted short-term bearish, but in order for an A+ market shift, we will need to break the raiding swing. So whatever caused this raid, it was created down here at this swing low. In order for an A+ market structure shift, price needs to break this area quite decisively after the raid, as well as create a deep return area. And when it breaks the raiding swing over here, it cannot take out any of your primary objectives. So for this trade, we did not have an A+ market structure shift. We just had a regular market structure shift. You'll notice that whenever I draw an RMR, for example, if we have some relative highs, let's just say we have objectives below, we have a raid above, we have a market shift, return, and then objective. So over here we had that raid, and what caused that raid? It was this leg from down here. So if this leg is broken immediately after the raid and creates a return area in a deep premium or in a deep discount for a bullish trade, then that would be an A plus market structure shift. Whereas for this example, we had a raid, we had a short-term market structure shift, and a return before reaching the objectives. So it's a very slight difference. However, this is a regular shift and this is a A plus shift. But obviously over here, if your shift is breaking your main objectives when price reaches your return area, there's no way you want to place a short, because what are you aiming for? Your objective has already been taken. And finally, the return. This is just where you enter, or your entry technique. Over here, if your market structure shift creates a gap in a very high premium, then the better it is. And if that gap is overlapped with an order block, which this one is as well, then the better the return area is. And if these order blocks are all stacking and creating more and more, and if within a fib, if I draw one from the top of the raid to the bottom of that market structure shift, the deeper it is, the better it is. However, if it creates an equal high, then it becomes a little sus. It becomes a little less probability because liquidity will be generated above, and who knows, there might be another short-term raid. But this will be a decision that you'll have to make. Is that short-term raid more likely than a big objective below? So price can't return so deep that it creates an equal high, otherwise it won't be an A plus return. And just one more thing on an A plus return area is that on correlating markets, none of them can fail. So here on the Nasdaq, as price returns, let's just say it returned and failed and broke that raid. But here on the Dow, that return didn't break the raid. If even one of the closely correlated markets fails, then it won't be an A plus setup. Sorry guys, I lied. Another thing about an A plus return, when it returns into a gap, for example, if it returns into a gap overlap, that'll make it an even better return. What I mean by gap overlap is, here's an example. If you see a gap that's been filled by another gap, like this gap over here was filled but created another gap, I like to call this a gap overlap. And if you're curious, my templates, I've just got gap, gap overlap, order block. And those are the main ones I use. But long story short, gap overlaps, pretty key areas. Go find one yourself, see how respected it is, or if it's respected at all. But let me scroll back onto Wednesday. And if your return area reaches a gap overlap, and here on the Dow on a 2-minute chart, we have a gap during the raid over here. But if I extend that to the right, you can see it's filled, but with another gap. So this is a gap overlap area, making this an even better return area. That brings us onto our third criteria for an A plus setup, which is timing as a whole. This is a very broad topic, and I've jotted down 4 of the main things that I keep in mind. I'll talk about power of 3 in a later video, but when I say time, this just means, are you trading in a time where it's more likely for volatility to reach your objectives? For example, if you're an Asian session trader, there's no way you're going to be targeting higher time frame objectives. It's just less likely, right? So more often than not, if you're an Asian trader, you're probably going to be targeting these very short-term objectives. So when I say time, are you trading within a time that correlates to the objectives you're aiming for? And I'm pretty sure most of you guys are day traders, so you like to aim for key areas that reach for the day. So if you're a day trader, the times you should be trading are within the London or New York session. Especially if you trade indices, more often than not, price is more likely to reach your objectives in the New York session. And if you're a UK indice or Forex trader, might reach those objectives in the London session. But basically, if you're a day trader, you should be sticking between London open to the London close, which is 2 a.m. to midday New York time, because that's when most of the volatility will be in place, so you'll have the highest chance to reach your objectives. Also, during these times, spreads tend to be much better. Next one is news. Obviously, during news, volatility is increased and objectives are more likely to be reached during those times. So if there's a news event here, news event there, over here, and you've got some really clean objectives, but price is over here at the moment, even if you get a very clean bearish RMR setup, chances are you're less likely to reach those objectives, and it's more likely that those objectives are actually saved for a key area in time. So save yourself sitting in drawdown, sitting in manipulation, and time your setups based on when it's more likely to reach those objectives. So in cases like this, when there's a lot of news ahead, before then, most of the time I'll be looking for short-term trades or even scalps to very short-term areas of liquidity. But obviously, the lower the time frame you go, if you're a day trader and you go down to scalping, your win percentage will be much lower. My scalping percentage is much lower than my day trading percentage. But the message I'm trying to get across is whatever objective you have, make sure you're trading within a time that's more likely to reach it. So these very short-term objectives are likely to be reached before news, and during news, those higher time frame objectives are more likely to be reached. And finally, expected ranges. Very briefly, if yesterday was a short range or an accumulation day, then today will more likely be a bigger range. So if you're looking for a big expansion in price for your trade, if the days prior were small ranges, then you're more likely to see an expansion on that day. I've zoomed out to a higher time frame, and I'm going to zoom out to some random area. Okay, we're zooming in, and you'll see that after small ranges of accumulation, there is usually followed by an expansion. So the smallest range that I can see within this piece of price action is over here. Obviously, this is a very small range, relatively speaking. And on the next day over here, if you're looking for an expansion in price, this would be your expansion. So it's more likely that after small range days, there's large range days, and after large range days, there's small range days. And then after small range days, there's large range days, etc. You know I think you get what I mean. So if you have some great objectives, you can look for them to be targeted after small range days. And after these large range days, you can look for some short-term objectives to target. Just some food for thought for you to do some experimenting of your own. So for this setup on Tuesday, we had a ranging day, didn't move too much from point A to point B. And then the next day we had an expansion range. So these are all little timing factors, but when you keep these all in mind, they'll all lead you to a higher probability or an A+ setup. Alright, I think that is definitely enough information for one video. There's actually a couple other factors like how is price behaving during the trade that makes it more likely to reach your objectives. Like if price reaches a short term but creates a bunch of equal highs, obviously your equal lows are now less likely because this is now an objective. And there are just some small things like that that also make it an A+ setup. So over here, we didn't make any equal highs, so nothing too worrying for price to wanna just reverse. Alright guys, that pretty much covers all the criteria I look at for an A+ setup. Most of these things you just kind of keep in the back of your mind, but if you're not used to looking at price in terms of these criteria, then it might be a good idea to write some dot points down on some criteria to check, but the more you do it, obviously the more natural it'll feel. And I just want to finish this video if you're an index trader, especially a US index trader, and that's in order to have an A+ setup on indices is that you must apply relative strength if it gives you the opportunity. So in a bearish trade, you want to participate on the weakest, and on a bullish trade, you want to participate on the strongest. But basically, over here on the left, there will be times when it's very obvious which one is weakest and which one is strongest. And when we're given the luxury of seeing that it's obvious which one is strongest, we want to make sure we take advantage of that. However, there will be times when Nasdaq, S&P, and Dow all look very similar. And in those cases, for me at least, it doesn't matter at all. Just pick the one that has the lowest spread, the cleanest objective, and the cleanest RMR. But for this trade, I actually left an announcement in the Discord. But long story short, on Nasdaq, during that return area, price retraced to 80%, S&P retraced to 70%, and the Dow retraced to 60%. So it's a very slight difference, but nonetheless, they're definitely not the same. It's obvious which one is weakest and strongest. So that's why I placed a trade on the Dow and not the S&P or the Nasdaq. Oh my god, this is going to be a long video, please forgive me. But we'll call it there. If you want me to revisit any topics or talk about anything, leave them in the comments below. But I really hope you enjoyed this video. And once again, Happy New Year to all of you. Whatever goals you might have for yourself, I wish you the best of luck. Make sure to work very hard to reach those goals. Nothing in life is free, because in the end, we're always paying with our time. And on that note, I'll talk to you guys next time. Leave a like and subscribe if you enjoy my content. It makes me very happy. But until next time, take care everybody. Peace.